Well, the Tesla doom and gloom continues. Did a quick search here on Google for Tesla. These are tailored results to Australia. I can't even imagine what the US results would look like. Here's a few recent headlines that Google's serving up. Tesla investors see no floor after losing $300 billion. From the BBC. Tesla electric car maker shares slide after Musk warns of slowdown. From the Sydney Morning Herald. Train wreck. Tesla suffers $122 billion wipeout. Musk blasted. From 9 News. Tesla shares plunge to wipe out $110 billion market value after Dow earnings call. We're going to jump into a few clips from the fake news, finance news soon, including some thoughts from Gene Munster, who describes Tesla's revenue growth outlook as the most sobering he's seen. But first, in case there's any haters watching, you'd like to quickly rub one out. Just wanted to share my transactions, all buying, no selling, never sold a single share of Tesla since 2021. My average price during that time, $244 per share. As you guys can see here, I've been buying very consistently, and most of those purchases over the short term, the next couple of years, in the red. In fact, it's quite a sea of red. But as I mentioned in the past, when I have cash, I buy while other people panic. Try and time the market. I don't think I'm that smart. In fact, I know I'm not that smart. My brain's nowhere near big enough to be timing the market. I'm just looking forward 10 plus years into the future and thinking, I don't think I'm going to regret making these purchases, even if the stock's down 10, 20, 30, 40, 50 plus % from my purchase price a couple of years later. This is par for the course with Tesla, an extremely volatile stock with a huge divergence in opinions about the future of the company. By the way, notice a few tiny pockets of green here amongst an actual wall of red. But in the interest of full transparency and just to give my haters something to jerk off to, these are every one of my Tesla transactions since the beginning of 2021 until the present day. Like I said, I got cash, I buy. Now, for what it's worth, there are points in time where I need to put cash aside for tax, quite a lot of it. So there'll be periods of multiple months where I don't have anything to buy, and other times where I've got plenty of cash to buy. And like I said, every spare cent straight into Tesla stock. I have multiple sources of income hitting my accounts at different points in time. I'm not sitting here with the amount of money trying to buy the dip, buy this. I've got cash, great, time to buy. Now, over the long term, this tends to work out. If we go back from 2021 and look previously, I was also consistently buying at every opportunity, and suddenly from a wall of red to a wall of green. Now, there may possibly be a lesson here, and that is that over the long term, so far, purchasing Tesla stock consistently, not panicking when the stock's down, not, quote, waiting to buy the dip, but just buying consistently since I personally began purchasing in early 2016, has worked out okay. And I'm still not even close to done. Like I said, I have a 10 plus year investment horizon. I look out a lot further, but this has always been a minimum 10-year investment, absolute minimum. And then new things occur with the Tesla story. When I first started investing, I wasn't thinking autonomy. And in 2019, midway through, I wasn't thinking humanoid robot, but here we fucking are. So that time horizon keeps getting extended by multiple years and then, wait for it, multiple decades. And you can see some of the early purchases here. I've had more than a 10x in terms of the value increase in those purchases. And my favorite of all time, buying Tesla stock in mid-2019 in the $12 per share range, split adjusted. I mean, holy shit, dude. Talk about an all-time deal. So the purpose of running through these is just to show you guys over the long term. My buying behavior on Tesla stock has remained extremely consistent. I got money, I buy. And the further back in time we go on average, the higher the total returns. But there are periods of extreme volatility. My favorite example of this, if we look at the all-time chart on Tesla, up over 14,000% since IPO, but Tesla stock in March 2014, split adjusted, closed at over $16 per share, split adjusted. About 2 years later, from that point in time, down about 32%. Roughly 3 years later, up over 50%. More than 5 years later, down almost 25%. During this period in which Tesla stock, while volatile, not only went nowhere, but in fact was down a span of literally 5+ years, the company continued to execute, had built the foundation for insane profitability, massive scale, had run away with the lead, and found themselves in an unassailable lead. Yet the market hadn't quite figured it out, right? Then, out of nowhere, the stock surges from that point, up nearly 1,400% in the following, not even 5 years. And still, from peak to current price, Tesla stock down 55%. Lessons 1. Volatility is par for the course when it comes to Tesla stock. And 2, if the stock market did a fair job of accurately valuing Tesla based on Tesla's stock price, the stock price would accurately map to Tesla's progress. It does not. Anybody who happened to have a time machine and or a crystal ball could have made a lot of money and become a multi-quadrillionaire by trading Tesla and buying the dip, timing the market, and maybe even making YouTube videos telling you how smart they are. But I don't have a time machine, a crystal ball, or a gigantic brain, so I just keep buying. And remember that period of just over 5 years where the stock essentially went nowhere? As you can see on screen now. From December 2020 until January 26, 2024, Tesla stock down over 8%. 3.5 years going absolutely nowhere. Not the first time this has happened and probably won't be the last. My personal opinion is that the majority of the performance within Tesla stock during some of these quiet times, the negative times, the flat times, has been narrative driven, not reality driven. Narrative driven. What do I mean? Well, first of all, the competition is coming. Tesla's a luxury car maker. They'll never sell high volumes of vehicles. Oh, the company's losing money. They're going to go bankrupt. Okay, the competition's actually coming now. Soon. Well, now it's going to come. The competition's going to come now. Look, they're not even making any money yet. They're not even profitable. Look how much money they're losing. If they keep losing money, they're going to go bankrupt. And obviously they can't make money. They're going bankrupt. Next minute, this happens. And now that completely irrelevant detour around Tesla, long-term performance, flat periods, down periods, narratives, and doom and gloom is out of the way. I just wanted to present this entirely unrelated doom and gloom about Tesla.
All right, for more, let's bring in Fast Money friend Gene Munster. He's a managing partner at Deepwater Asset Management. Gene, great to have you with us. What is your take on the quarter and your reaction to the stock move?
Melissa, this was the most sobering outlook that I have seen from Tesla when they talk about a step down, a notable step down in growth rates. I just want to put that in perspective. The street was looking for 19% revenue growth in 2024 for this year, and they said it'll be notably lower than that. So it probably comes in at 10%. When I see that, I think stock's down 5-10%. That was my initial reaction. I'm surprised to see where it is. The reason why I believe it's holding in is twofold. You highlighted the importance of the gross margin ex credits. I would just add to that, that's the first time in a year that we've seen that improve. And so that is a surprise on the positive side, especially given the ramp of Cybertruck, some of that investment. And second, I think the stock reaction speaks to the conviction of shareholder investor base. And effectively, this comes down to a very simple question do you believe that EVs are the future? And if the answer is no, that you think that this is going to take 20 years to get to electrification and autonomy, then you believe the stock should be down measurably, meaningfully, 10% more on this news. But if you do believe in the future, then this punky, soft guidance that they're giving for this year is going to ultimately prove to be noise, because everything that Tesla's doing, building out this next generation vehicle platform, everything that they've done in their investments in autonomy, all of that is coming at a time where traditional auto is stepping back from these. And so
Gene coming out with some facts, and you notice how he made some examples. If you don't believe EVs are going to happen quickly, as in it's going to take 20 plus years, then you would assume the stock would be down 10+%. This was recorded immediately after hours following Tesla posting their earnings report, but prior to the actual earnings call. And as we can see, since that point in time, turns out that Tesla stock down more than 10% and staying there. So, of course, this is just Gene's opinion, but let's just say that he was right. This would suggest that the stock market believes electric vehicle adoption is going to be a 20-year project as opposed to less than 10. I know where my money is, and it's not on the 20-year scenario. And just quickly, while this is paused, wanted to again emphasize some of the doom and gloom we're seeing here. Not necessarily saying that everything that Gene is saying is doom and gloomy, but the way this is presented on CNBS. Deepwater's Gene Munster says Tesla revenue growth outlook most sobering I've seen. Plus, you've got the stock, red, scary color red, plus on screen the label, Tesla shares drop on weak auto sales.
That's the question. If you believe in electrification and autonomy, Tesla's actually in a better position longer term. And I think that the reaction to shares speaks to the conviction, long-term conviction that Tesla shareholders have.
Can you help us understand, Gene, what this next-gen vehicle platform is and what that gives Tesla in the long term? I mean, we may see that step down in volume growth this year, but on the other side of that, if we see increased efficiencies, if we see increased output, this could just, you could smooth this year over and see the trajectory higher. That's
a great question / comment from Melissa Lee. She's totally on point, by the way, in terms of this being a blip on the radar in the scheme of things this year. Just smooth that over. She's totally right.
you'd see an acceleration back potentially. I mentioned the 10% for this year, but next year could be 30% plus growth. And the specifically is that this is a lower price vehicle, likely around a Honda Accord. A typical Honda Accord in the U.S. starts at $30,000. That's below the average selling price of a car in the U.S. at $48,000. And it's likely going to be a couple vehicles. One is a lower price car with a steering wheel, and then followed by a robo-taxi. And so that's what they're talking about. They need to build enough of a gap between the Model 3 and this lower price vehicle, not to create some confusion. So,
by the way, totally agree. And good news is that is exactly what's happened. The refreshed Model 3 recently dropped. It's got a bunch of higher end features that honestly you'd probably expect in the Model S/X, not necessarily the 3 and Y, but here's what's happening in my opinion. Tesla's intentionally differentiating their vehicle lineups ahead of the release of the next-gen vehicle. We've heard recently on X from Tesla themselves that Tesla is in fact working on a performance Model 3. Now, this is going to create quite a strange situation. The performance of Tesla's new refreshed Model 3 will be not far off a Model S. I'm not talking about the Plaid, but even the Plaid. Not that far off. It's going to be insane performance. 0 to 60 time, probably 3 seconds flat. Maybe even high twos. Now, I know that sounds crazy. Perhaps I'm a little bit delusional, but as I record this, Tesla's entry-level Model S, available in the US for $74,990, has a 0 to 60 time of 3.1 seconds. Model S Plaid, 1.99 seconds. As I record this, the refreshed long-range Model 3 in the United States, available for $45,990, has a 0 to 60 time of 4.2 seconds, which is extremely snappy. And that's not a performance variation. So on screen now, Model 3. Long range, this is the refreshed version, 0 to 60, 4.2 seconds. But check this out. Model Y long range, 0 to 60 time, 4.8 seconds. However, the performance variation of the Model Y, which is not refreshed, it's not 4.8 seconds. It's 3.5 seconds, 1.3 seconds faster. And this, again, is not a refresh of Model Y, which is inevitably going to be coming. If we were to shave 1.3 seconds off, and again, it's not a perfect analogy, but just play along at home, 1.3 seconds off the Model 3, 0 to 60 time performance variation, we'd be at a 0 to 60 time of 2.9 seconds. And again, for context, the entry-level Model S is 3.1 seconds. Now, this is going to create a very interesting issue for Tesla. Given that the refreshed Model 3 now has ventilated seats, a quieter cabin, a bunch of higher-end features, even has a screen in the back as well, the differentiation between Tesla's all-wheel drive Model S versus the refreshed performance Model 3 coming soon, the delta between those vehicles is really closing. Now, I'm not saying they're going to be quite the same. You're going to get more range with the Model S, obviously. A few higher-end features, including the ability to play PS5 quality games, which may be reason enough for some people. But the reason I mention this is just to flag the possibility that maybe Tesla might, not saying they will, but might, delete the Model S, at least the all-wheel drive variation. It is possible that when the new refreshed performance Model 3 is available, it may no longer be possible to buy an all-wheel drive Model S. Tesla may only offer the Plaid. Again, not a prediction, just pointing out it's going to be a pretty hard sell to justify the Model S all-wheel drive when for, let's call it around $50,000 US, you can get very close range, very close performance for about 65% the cost. And so to Gene's point, I think what's kind of happening right now is that the Model 3 with the new refresh and eventually the Model Y with its inevitable refresh are in essence going to become what the S and X previously were. This will pave the way for a next-gen vehicle around that $25,000, $30,000 mark, and there'll be enough distinction and differentiation between the Model 3 and Y, which will become more of Tesla's higher-end / luxury / premium vehicles, that Tesla's next-gen vehicle won't completely destroy Model 3 and Y. So I have a question, folks. Is it possible that Tesla might delete the Model S, at least the all-wheel drive variation, when the refreshed Performance 3 is available? Is it possible they'll delete the Model S and X entirely? Is it possible a Plaid version of the Model 3 will appear? I personally would not be surprised. The last thing Tesla wants is for the next generation vehicle to be too close in performance, features, functionality, and specifications to Model 3 and Y.
This is going to be, again, a measurably lower priced vehicle and compete with where the sweet spot of the growth in the automotive market is today.
Hey, Gene, it's Karen. Thanks for being on with us today. So I've always had trouble with how do you value Tesla then? Put it all together. How do you come out with a valuation for Tesla?
So what I look at is where the revenues are going to be in 3 to 5 years. I want to revisit it after the call here, but think about what that revenue growth is going to be. I mentioned a step back up to 30%. And then I go and look at what other companies are trading at. The best comp is Apple. When it comes to hardware, software, services, I think that's most representative of Tesla. And so that's a 6 or 7 times multiple. And so when I put those two together, I can comfortably get to above a $1 trillion market cap for kind of that 5-year period. Again, I want to see what's going on with their commentary on kind of long-term growth. But that's how I get there, as I think about this as a revenue multiple relative to where the revenue is going to be in 3 to 5 years.
Meanwhile, I'm thinking, where's it going to be in 10 years? And there is a reason that this matters a lot. Posted this on X the other day. The long story short, Tesla has some seriously ridiculous opportunities to increase the scale of the company by multiple orders of magnitude in the future. You can see on screen now, I'm not going to rehash that, but I just wanted to share one thing, a graphic I included, with the intent of triggering a few people who get mad. What the hell, bro? What? So, this image, in essence, attempts to represent Tesla revenues, earnings, pick your metric, the financial performance of the company, the scale of the company, through their domination of electric vehicles to play out over the next 10 plus years, autonomy, and then the Tesla humanoid robot. If you're measuring Tesla and looking at future revenues out over a 3 to 5 year window, you're somewhere here. So insignificant in the long-term scheme of things. It basically looks dead flat. It's not. But in order to fit everything else, the next few decades onto this chart, the next 5, 10 plus years look like nothing. This is important. This is why I continue to bang the drum. It's so important for you guys to take the time to model out over the long term the potential implications, not just electric vehicles, but autonomy and humanoid robots. It's obviously impossible to know what the future looks like, but you've got to at least take the time to do the exercise because the numbers get truly insane. And if the numbers are truly insane, you want to at least have considered them and not have decided that your time horizon ends somewhere around here. Just imagine that you're modeling Tesla and you get stuck here. Okay, well, that's 5 years into the future or 3 years. Here we go. Okay, great. Yeah, it's positive. Revenues are going to increase. It's good. Yeah, they'll do pretty well. Could easily see them being a $1 trillion+ company over the next 3 to 5 years. But I don't see beyond that. I don't think beyond that. I don't model beyond that. I don't even consider beyond that. Would your behavior change if instead you were looking out into the distant future and you were seeing this occur? Is it possible the way that you would value the company here today will be vastly different? Just a bit of food for thought. I do understand I sound like a deluded fanboy, completely detached from reality. But the good news is 10, 20, 30, 40, 50 plus years from now, this video is still going to be online and I'm still going to be alive unless an accident takes me out. And to tie things together, this one graphic meant to represent the potential scale of Tesla over multiple decades might explain my consistent buying activity on Tesla since early 2016 with no end in sight. And yes, I still firmly believe that based on what I know, which isn't a lot, let's be honest, Tesla, as far as I'm aware, is the best risk-adjusted opportunity available in the stock market. It's obviously not. There's probably better opportunities. I just don't know them. And finally, if you guys aren't aware, there's probably 12 new people watching this video. If you'd like to see some of my longer-term assumptions for Tesla out over the next decade, bear case, base case, bull case, and even a hyper bull case, you can access my full Tesla valuation model on Patreon if you're an investor supporter or above. See ya. Want more content? Early access? Bunch of perks? Click the links in the pinned comment. AG1 has given me a massive, meaningful boost in energy, allowing me to do a lot more every day, including using my brain more and using my body more. I highly recommend you guys and girls check it out. It's an excellent way to fill in nutritional gaps. It's got 75 high-quality vitamins, minerals, and whole food source nutrients, plus prebiotics and probiotics and digestive enzymes and adaptogens to help you deal with stress. Plus, if you click the link in the pinned comment or head to drinkag1.com/SMR, you can get yourself a 1-year free supply of vitamin D3 and K2. But don't take my word for it. Here's what some of you guys and girls have to say. AG1 has changed my life. I was, as you described, treating myself like a circus, ate like trash, rarely exercised, used alcohol as a stress crutch, cannabis also. AG1 is what gave me the kick in the ass, got me back to the gym, motivated me to do more for myself, family, my business, etc. Keep doing what you do. Now, I know there's some skeptics, the same kind of people who think Elon Musk is a fraud, reading this going, what do you thought? There's no way that's possible, bro. It must be a placebo effect. Believe it or not, this is a recurring theme. If you give your body everything it needs to feel and perform its best, including having a lot more energy, you'll need ways to use that energy. For me personally, that includes more exercise, moving my body more social activity, and more cognitively demanding tasks, including producing a ton of exclusive content over on Twitter and on Patreon, plus my daily YouTube uploads. The proof's in the pudding. On to another testimonial from a viewer of this channel. SMR, you asked me to provide feedback on AG1. Here it is. It has helped with mental acuity, stamina, and intestinal waste management. Can't read between the lines. Certainly helps with regularity and digestion. That's what the digestive enzymes are for. It has also dramatically reduced my cravings for sugar. You guys need to stop eating sugar. It's fucking poison. I'm 50, 5'9", and overweight, aka a fat motherfucker. I think that's a technical term for overweight, isn't it? Is it fat motherfucker or obese? I can't remember. I average 100 hours a week in the West Texas oil fields as a safety supervisor. Jesus Christ, dude. No wonder you're struggling to keep your weight under control. 100 hours a week. Brutal. It has helped me lose weight. It is not an appetite suppressant. It can help fat people suppress cravings, and motivation to be healthier is critical for changing your diet. Love you, brother. Again, this is a great point. It's something people really don't seem to grasp. If you have more energy, everything becomes easier. It's like turning on easy mode for life. A few years ago, before I was taking AG1, my health was trash. I was struggling to get through the day, had afternoon fatigue. The last thing I wanted to do was either use my brain or move my body. Didn't have the energy. Now, my biggest struggle every day is figuring out ways to use that energy. I'm exercising way more, doing a lot more with my friends and family, and of course, my work output has increased substantially. And you can fact check me. Check out the average length of my videos I was posting to YouTube 3 years ago. Need I say more? And one final testimonial. Love this one. Okay, here's the deal for me with this AG1 shit. I'm 41 years old and not the type to eat, drink, smoke, or sleep healthy, so I was skeptical. That being said, here's what I experienced. Day 1, meh. Day 2, afternoon fatigue was about 45 minutes late. Day 3, 0 afternoon fatigue. Day 4, 0 afternoon fatigue plus extra energy. Day 5, again, 0 afternoon fatigue plus energy, wondering, what the fuck, really? See, this is the thing, right? The results for many people are just almost too good to be true. This is the same experience I had. My afternoon fatigue just vanished out of nowhere. I'm like, wait, what the fuck? Why am I not tired in the afternoons anymore? Surely, it's not that AG1 shit, is it? Turns out it was. Day 6 and 7, same thing. Day 8, same thing. Plus, I had the want to get things done around the house that I normally would slack off and not get done. Again, the point, extra energy, you'll need to use it, you'll find ways to use it. Day 9, 10, and 11, and today is day 12. I fucking love it. So however you managed to get me to buy it, I'm so glad you did. Thank you so much, SMR. It really changed me so far. Guys, this shit really works. Just try it. By the way, this is the reason I continue to relentlessly promote AG1. A lot of people get real fucking mad in the comments. Oh my God, Snake Oil Salmon's sold out. Oh my God, he's a scammer. This is fraud. But constantly, I'm pretty sure everyone making these comments is also currently short Tesla stock. I'm not particularly concerned about people having a negative perception, those folks suffering from small brain syndrome, still living in my bum's basement syndrome, etc., writing mean comments, claiming AG1's a scam or it doesn't work. I mean, bro. When I get feedback like this is what keeps me going. Just try this stuff for a month, and if you don't get these results, get your money back. See, it's a literal no-brainer. It's an IQ test at this point in time. Testimonial after testimonial after testimonial like this. Get your money back if it doesn't work. Just try it for a month, and if it doesn't work, get your money back. Today's the day. It's finally time. Be like this guy who was a massive skeptic, but finally, after 1,000 promotions in a row, caved in, tried AG1, and has results like this. Head to drinkag1.com/SMR or click the link in the pinned comment, and please, let me know how you're feeling in a few weeks' time. Now, if you'll excuse me, time to put my extra energy to good use. I'll be recording some more exclusive content for Patreon and my Twitter subscribers. So click the links in the pinned comment. See you over on Twitter and or Patreon, and don't forget to grab your AG1. Love ya.